Hi everyone, welcome to another video from your tutoring team. Your tutor for today is Whitney, and yes, we'll be looking at some principles of account, based on what its title of the video says. Past paper questions, exams are right around the corner, so have to be on our A game right now. So let's get right into it. But before we do not forget to check out our social media platforms. You can send us a message on WhatsApp. Check us out on Instagram, follow at Tutoring. We're on YouTube here at Tutoring. Leave a subscribe. And if you want to send an email, go ahead. So subscribe, share, like, comment. All right, let's get started into today's session, which we'll be looking at 2016 past paper 1. So number 1, a non-trading organization, is mainly concerned with, we're talking about non-trading. So we're not dealing with any trade or any exchange of goods. So importing goods for resale are wrong. Trading only with wholesalers, no. Making maximum profit for the proprietor, It's D, providing various services for its members. So we're dealing with non-trading. We're not dealing with any goods, right? We're dealing with services. The term accounting refers to the correct answer for this one is C, the recording, analyzing, and interpreting of business information. The rest of it really don't make sense in comparison with that one. Which of the following accounts are nominal? Firstly, you need to ask yourself, what is nominal account? What is a nominal account? What are nominal accounts? Nominal accounts, they're also called our temporary accounts, right? And these are our revenue and expenses accounts, right? So these are the accounts that we usually find in our income statements per se, right? We have what we call our real accounts or our permanent accounts. These accounts are the accounts of assets, capital, liability, right? These are found in balance sheet. So we close our revenues and our expenses account to something that we call the income summary account. So our nominal account in this case right here would have to be our wages and rent, because these are the only accounts that take into consideration they're both expenses, right? Stock and debtors, no, these are both assets. Assets are permanent account, real accounts. Machine and plant, same thing, those are assets. Creditors and fixtures, creditors are liabilities, fixtures are assets, right? So these two expenses here are our nominal accounts. Number 4, how would you classify land and buildings in a balance sheet? So land and buildings, we own them. So first of all, they're assets. But what kind of assets are they? They are fixed assets, or what we call non-current assets. Moving on. Number 5, which group of assets below is recorded in the order of liquidity? What is the order of liquidity? The order of liquidity, it lists your assets right here. So looking at our assets, we list them from the ones that are most liquid to the ones that are least liquid. So the ones that are easiest to turn into cash, those are listed first. And the ones that are not so easy to turn into cash, those are listed last. Cash is your most liquid asset. Therefore, when dealing with order of liquidity, the first thing, as long as you have cash on your balance sheet, that should be the first thing that is listed, because you can't get more liquid than cash, right? So right away we eliminate C and D, because C and D no start with cash. So can't be those. It's between A and B. So we say, all right, A, cash, plant, and machinery, then stock. No, sir, plant and machinery is a non-current asset. Non-current asset cannot be more liquid than a current asset. So no. So it is definitely B, cash, then stock, then building and lands. Cash is a current asset. Stock is also a current asset. Buildings and lands are non-current assets, aka fixed assets. So these are the least liquid of the 3 listed right here. Then we go on to item 6, which refers to the following balance sheet. The value of total fixed assets is, so how are we going to get the value of total fixed assets? We need to add all our fixed assets together. So look in the balance sheet right here, pick out the fixed assets. What are fixed assets? These are assets that we have in the business. We intend to keep them for a long period of time in the business, and we do not have them with the intention of selling them. They are to be used for the business purposes, during our day-to-day operations or whatever. They're used within the business. We don't intend to sell them, and we expect them to really last us a long time. So that's basically what your fixed assets are. Which one of these are fixed assets? Land is definitely a fixed asset, yes. Motor vehicle is definitely a fixed asset. And your fixtures. So all you're going to have to do now is to add your individual fixed assets to get your total fixed assets. So you add your 4,000 plus your 8,000, that is going to give you 12,000. Plus 2,600, which is going to give us $14,600. And the answer for this one is B. Ensure you read the questions properly. All right. Number 7, the summarized position of Foster and Scott Limited at 6th of March 2015 was as follows, right? See, there were current liabilities, current assets, fixed assets, long-term liabilities. The question is asking us for the capital of Foster and Scott Limited at 6th of March 2015. How are you going to find the capital? They gave us current liabilities and long-term liabilities, and they also give us current assets and fixed assets. Given liabilities and assets, how are you going to find capital? This is where it is important to remember, right? Your accounting equation. You cannot get rid of it. So if you don't know it, you need to go and know it before your exam. You really need to know it. So assets is equal to your liabilities plus capital. We can transpose that equation. I remember mentioning this in the first Principles of Accounting video that we posted. It is in that video because it's very important. You realize it comes out a lot because the accounting equation is very important. It is the base of accounting, okay? So you can transpose the formula to get that your capital is equal to your assets minus liabilities. So all you're going to have to do now to find your capital for Foster and Scott, you have to find your total assets, and then you subtract your total liabilities from your total assets. So let's go. Total assets is your current assets plus a fixed assets. So that's 100,000 plus 200,000, that's $300,000. And your total current liabilities is $150,000 plus $60,000, which is $210,000. Total liabilities of 210 from your total assets of $300,000 is going to give us $90,000 as our capital figure, which is B. Moving on. Number 8. If the following list of assets found on the balance sheet of a retail trader were to be arranged in order of liquidity, the sequence would be, listen, the order of liquidity and the order of permanence thing, know it. You see, the multiple choice questions come up with them. Order of liquidity. What minute the order of liquidity be? You list the one that are most liquid first, right? Good. So you know, what me say? When you have cash, order of liquidity, you start off with your cash. So the answer cannot be A. Either B, C, or D, but definitely not A. Let's look at B. Cash, then fixtures, and debtors. No. For book up in our fixtures, you say, fixtures, no. That's a non-current asset. So it cannot be B. C, cash, bank, fixtures, debtors. How can fixtures come before debtors? No, that's wrong. Fixtures cannot come before debtors because fixtures is non-current while debtors is current. So no, that is wrong. So the answer has to be D. Let's verify though. Cash, bank, good. Then debtors, yeah, motor van, fixtures, and buildings. Excellent. So this is the one that is in the order of liquidity. Number 9. Number 9 refers to the following information about the assets and liabilities of Mr. Jones. From the information above, Mr. Jones's capital amount is, again, how do you know capital? Your capital is equal to what? Your assets minus your liabilities, right? That's your capital. Right? Good. So let's go. We have cash at bank, we have inventory, we have accounts payable, accounts receivable, bank overdraft, cash in hand. Let's figure out which of these belong to the asset category. Cash at bank, assets are anything we own, liabilities are anything we owe. So cash at bank, assets, inventory, assets, accounts payable. Anything that is payable is a liability. Means that we're supposed to pay. What the people them, right? Accounts receivables, assets, receivables, assets. Bank overdraft. We have a negative bank balance, which means that we owe the bank. So bank overdraft is a liability. So in case you did not know that, yes, it is. And cash in hand is definitely assets. So we're going to total our assets, which cash at bank, that's 800, plus your inventory of 400, plus accounts receivables of 125, plus your cash in hand of $500, and you get 1825. So that's your total assets. Then you're going to total your liabilities, which are your accounts payable of 600, plus your bank overdraft of $250, and you get $850 as total liabilities. Total liabilities from your total assets of 1825, and you get an answer, which is your capital of $975. All right, let's move on to number 10. A firm sold 50 items at $80 each. Of these, 9 items were returned. Which of the following will the firm issue in respect of the items returned? So we sold $50 at $80, 50 items at $80 each, sorry. But then 9 were returned, right? Who returned the 9? The customers, because if we're doing a sale, we sold to customers as the firm, right? And the customer returned 9 of these 50 items to the business. So this is talking about source documents. Which source document are we going to issue? When customers return goods to the business, which source document do we issue? Definitely a credit note, right? A credit note is a source document. And it's a credit note for 720 because it's going to be the 9 items returned multiplied by the $80, which is the cost of each, cost of one of them. So a credit note will be issued for $720. Number 11, we're going up to number 15. Let's go. Number 11, a trade discount may be described as an allowance given. Please note it's a trade discount. You need to go back and know the difference between trade discount and cash discount, right? A trade discount is given when goods are bought in large quantities. When you buy in bulk, you get a trade discount. A cash discount, no, you get a cash discount to incentivize prompt payment, right? So when they want you to pay quick, they give you one cash discount. Like, it's all right, if you pay within 10 days, they get a discount of 5%. That's a cash discount. There's a difference between trade discount and cash discount. Please know it, right? So B, for quick payment of accounts, B would be cash discount. But we're talking about trade discount for this question. So it is given to traders who buy in large quantities, who buy in bulk. That's when we give trade discounts. All right, number 12. Item 12 versus the following information from the books of a company. So from this above information, what is the correct closing total for the sales account? So which of these affects sales account? Cash sales, credit sales, stock on hand, drawings, cash purchases, credit purchases. So purchases don't have to do with sales. Drawings don't have nothing to do with sales. Your stock on hand, what affects your sales account? It's your cash sales and your credit sales. So the total of your cash sales and your credit sales will show the amount they have as totals on your sales account. Because cash sales is sales that you need to know a difference between cash and credit sales also. Cash sales is when you sell goods and you receive payments immediately. Credit sales now is when you sell the goods them, but you don't get any payment immediately. You get a promise that a payment will be made at a later date. But they're both sales, and both of them affect the sales account, and both of them are recorded as credits in the sales account when they occur. So your total sales would be $10,000 plus the $45,000, that's $55,000. That increases the sales account. They're asking for the closing balance, right? So we need to look if anything here would like decrease the sales account. We don't have any allowance, discounts, or anything like that. We don't have any returns on sales. So there's nothing here that reduces our sales account. So the answer would be your $55,000 because you just add your cash sales to your credit sales and that's it. Because the other accounts there don't have anything to do with your sales account. All right, number 13. Which of the following would not appear in a cash book? What do we put in cash book? When would I spend money? When would I get money, right? That's when we put things in the cash book. Payment for goods, definitely. When we're coming out of the business, we're paying, we're losing money. Goods sold on credit? No, that won't be in the cash book. You have cash sales in the cash book. You don't have credit sales in the cash book. Because when you sell goods on credit, you don't get no money. There's no exchange of cash. There's no exchange of money in any way. So that cannot be recorded on the cash book. The goods sold for check, definitely. We're selling goods and we get money in our bank account. We're getting money right there. That's definitely gonna be reflected on the cash book. Goods bought for cash, definitely. We're spending cash. Money is coming out of our business. So that is going to be definitely recorded on the cash book. But when you have goods sold on credit, no, that not affect none of our money. That's not affecting the money in any way because there's no, when you sell things on credit, remember, it's a promise to pay at a later date. We don't collect money when we sell goods on credit. We are going to collect it at a later date. That's the promise that we got. Same thing as saying selling goods on account. All right, number 14. On January 12, 2015, a merchant purchased goods amounting to $120 on the following terms. 5% cash discount if paid within 30 days. He settled his debt on 28th of February 2015. How much did he pay? So the goods were purchased on January 12, 2015. 120 feet, right? But he got a credit term wherein if he paid within 30 days, he would get a 5% discount. So he was able to settle his debt on the 28th of February. The 28th of February, so say, he never meet the 30-day requirement for the discount, right? He gone over 30 days. He did not settle his account within 30 days, so you wouldn't get the cash discount. Therefore, you would end up and pay the full amount, which is $120. I hope that is clear. The answer is C, $120. And last one, when a proprietor withdraws cash or other assets from a business, what effect does it have on drawings or capital? So we're withdrawing money from the business or any other asset that the owner is withdrawing money or asset from the business. Capital is decreased, capital is increased, drawings are decreased. All right, first of all, the capital cannot be increased because it's when you are investing, when you're adding investment to the business as the owner, then your capital increase. So B cannot be the answer. Drawings are decreased. No, your drawings are actually increased. And when drawings increase, the effect of your drawings on your capital is that drawings reduces, drawings decreases your capital. So when a proprietor is going to withdraw assets from the business, it is going to actually decrease our capital. Oops. So when they withdraw assets for them personal use and them something there, withdraw cash or whatever for their personal use from the business, it is considered as drawings. And what drawings does is drawings actually reduces our capital account. All right, and that would be it for today. So yes, those are just the few questions that we wanted to look at. I hope it was helpful. Hope you learned something. And don't forget, it's not too late to sign on. I mean, exams are right around the corner. So if not another time, then no, it's definitely the time to ensure that you get the extra boost you need, So here's our contact information. Reach out to us. We're always happy to assist. And don't forget to subscribe to our channel, hit that like button and share. I was Whitney, your tutor for today at Tutoring, where we apply knowledge and produce results. Until next time, bye bye.